So welcome to another clean-cut hedging video by the Trading Mentor. My name's Will Sebastian. We're going to jump straight into it. Before we do, if you enjoy this, and you can see on every single hedging video I'm posting that we always end every market move, no matter the asset, no matter the time, in full gains overall with a low drawdown structure, then like, comment, share, subscribe, and go underneath if you're interested in learning a little bit more for free. Let's jump into this one. Okay, so we'll pick something random that could range a fair bit. Pound New Zealand, let's go for that. And we will go for 100k balance. I'll just get this on here. It's going to make me use Ducascopy. Okay, so a date. Because someone gave me something random, but as I can't do it live at the moment, we will go for, I don't want to make it too recent, i.e. 2020 onwards. We know COVID's going to come, so let's go for January the 12th. And I'll just set this to end whenever. Okay, so we'll create the session and we'll play it through. So I haven't assessed these moves, and I'll use the daily time frame a bit so we can, get something quite fair. So we'll remove all these drawings because I've backtested it before on this series for YouTube, and we'll go through. Now, what you can see at the moment, just off the bat, is obviously a long-term downtrend. In many cases, I'll just put the time frame up so I can see it a bit better. You can see massive fall since 2015 August, right into 2016, late 2016. So 34% of a drop is massive. So I definitely want to think about buying. And, it's come down for a very long time before that. Now, because of the way the market looks, okay, and this is why price action rules are so important, you can see that that is just ugly. You've come up, and obviously that latest candle is showing you that there's a lot of negative side sentiment, so it's pouring down. So I'm not desperate to buy this. I wouldn't consider this a fantastic dip to do something like this. Okay, I mean, it could do, but I'm not going to chance it. So I'd only probably buy it. I would say about 168 or about 169. I'd say. So a little bit lower, and I'd happily take that. Okay, so it's dropped a lot. We're at the extreme, and I will consider this long now. So I'm going to take something like a 0.7. Okay, in fact, no, I'm going to do a max size, and I may change my max size just depending on how the market unfolds. So you've got a nice initial push there. Okay, that is a decent move. And it was at the absolute low. So if I close that out, okay, I can take that, and I'm in gains there. Now, I'm just going to swap it on the larger scale because it's going to allow me to do this a lot more quickly. I really don't think I want to short anything until we get about 177 or 178. And now what's happening is you're dipping back. Okay, so instead of buying something large, I'll take a bit of a lighter position. Okay, and if we keep pushing up, I'll take that out. I don't know why it's not paused. Okay, but I think I'll have to click play it like I normally do because of this. And what I will do is I'll consider adding right down there at the low again. So still looking quite bullish here, or somewhat sideways at least. Okay, and we're going to keep going through. And I will take it this time. Now, because the market is so low down on the long term, I know any short I take is going to be very vulnerable. So I'm just going to take something light for about 0.15. I'll flick onto my 4 hour for this because I'm going to get down and dirty, I think, a little bit. Okay, you can see somewhat of a sideways move coming along here. So I'm happy for this to break and me start losing money on shorts. It's not a terrible thing. I do have some gains on the table. But I'm just going to hold off for a sec because I much prefer that level lower. Okay, if we keep going, I'll just add another short. Now, it looks very supportive at this point. Okay, so I am going to take it this time. I'm going to add a light long. And then if we keep going lower, I will add another light long. Okay, so I'm going to swap between time frames now. A lot of people have asked that. Add another light long there. A lot of people have asked me to do that in the comments on these videos. We're always ending every video in net gains, as you will know if you watch these. And it's just because we know ultimately I'm going to be wrong on these shorts, okay, or even the longs. I don't know which it's going to be yet, but it's probably most likely going to be the shorts because you've already fallen so far over the long term. But I know I can protect myself with hedge longs. So as an example for this video, I'm starting to be wrong on that 0.15. So what I can do is I can start to look at perhaps hedging 1/3 of it early, just in case we keep trending to the upside. And you can see on this 4 hour that that's now going to be the case. So I'm it's not a huge amount back, no, but you take sort of 7 or 8 of these and you've got your drawdown back, okay, which is often how we're taking advantage of hedging overall, because the market doesn't tend to move one way forever. When it does, as long as you're reducing early enough, you'll get away with it. So I'm going to just show how I would end up on top here. So I got $30 last time. I got $52 this time. So I've got $82 now. What I can do at this point is I can actually add a little bit more short, just in case we break, because I'm, like I said, I know we're down a long time off. Okay. So I'm aware that we might keep, we could keep dropping, but I'm also aware that actually, if you look at it on the monthly scale, there's a good chance we're not going to do that and we're going to keep going up. And someone asked this specifically, okay, well, what if you trend massively? What do you do then? So this is basically what I'm showing you now. So we've got $80 in hedge gains already. I can take that light short off for another $50. So I'm up $130 now. I can take a very light long, just in case we keep going up. All right. And now we're not going up, we're dropping a bit more. So if I wanted to, I could close that short out right now. Okay. If I wanted to. But I'm not going to do that. I'm going to take the same amount long. So I've hedged it 100%. And now on this pop, I'm going to take that one for $200, that one for $30. So now I've got $410 of profit over the same move. And that's why we get an edge with hedging. Because essentially what I can do is I can remove this if I want to. If I kill this off now, it doesn't cost me anything. I'm in net gains overall. So I don't want to do that. Okay, and I'm just going to demonstrate, obviously, how you can hedge anything, no matter how wrong you are, as long as you're good at it. You've had the practice, you know the method, and you know what you're doing. So we're brushing onto this 200 MA, and now on a dip, I'm going to hedge again. Okay, so I'm going to take a 0.05, and I'm just going to close this out, because if we keep rallying, I don't want to be in it. Now, I can also, if I want to, take this one out. And normally I would, and we'd still be in net gains, because it looks like what's happening is you're gaining upside momentum, and you might keep doing something like that because you've come so far down already. Like I said, if you look at the monthly, you can see that quite clearly. You're very vulnerable to that up move. So you're always understanding, and that's why it's so important to learn all rules around hedging, including time frames and how they cascade, how they work, how they link, essentially. Because then you won't get caught with shorts low and you won't get screwed over. And for that, you need risk management rules, etc., etc. So I'm going to take another 0.05 just to hedge a bit more. And if we drop any lower, what I will do is I'm going to consider closing that short. So we didn't. So I got $50 there. So that's 460 in hedge gains, 490 in hedge gains, or overall DCA and hedge gains. I can take 2 more light shorts here. So I'm already up a fair bit. And now on a vicious dip, I'm going to kill that old short, because at this point, it looks like you're getting these MAs tuck under, and you could be seeing something quite vicious. So I'm going to take another light long, get rid of those new shorts I had. Now I'm well over sort of $500. I'm going to take 2 more shorts there. So I'm keeping it light, kill that one off. So another 100, so that's 600 I've got. So all the while, I'm getting more wrong here, okay, on this one. I'm still protecting myself by taking the gains that are going to be necessary to kill this off. And at this point, I could close it if I wanted to. So I'm going to take 0.10 long, okay. So I've got a big push up, and this is still losing money, but I'm gaining another $200, so 25% of it. And now I don't need to short really until I get something reasonable, which is probably going to be up here. So I'm not interested in shorting anymore until something like that. So I'm going to go 0.2. I'm going to play that through. And again, remember, I don't only, I can't, just let it fall a bit more, and then we can get a bit more of a better explanation, I think. But you don't, so there we are, a little bit higher, I'll short again. And now this is more and more out the money, so I'm going to want to close it at a time that's really going to be most valuable. Don't want to short again until we get about there. If we get there, okay, we have, so I'll short again. And now the exposure is picking up and the drawdown's picking up, but I'm still in net gains overall. So on a nice pullback like that, I'll take some off. I'll take something like a half size long, just in case we pop back to the highs. And if we don't, I can take another $118, take another light short at that level because you've hit it once. And on a good push down, I'll kill it. So now I'm waiting for a decent retracement to think about using the money I've made to kill off the shorts I've got wrong. So that's another push for $186. Take another short at that level. And if we can pull back a little bit more, I should have taken that. I'll take that off. And I'm still in net gains. So no matter what happens, I'm still not vulnerable, really, because my sizes are sensible, and I'm trading with a high hit rate. I understand the sizes I need to be protected from anything drastic. And really, the amount of money I've already made, I can kill this off. Okay, but again, I don't want to do it unless we get something decent. Okay, so that's pullback 189 to 185. It's not terribly decent, okay, but it is a bit of a pullback. So if I want, again, I can wash this away in case we have a very long-term uptrend, which I don't want to get stuck on, particularly. And that's another $70. So just in case, I'll take that one off. So I've closed it with the money I've made. I'm still well up and I'm fine. I can now add another 0.1. I can kill that one off for gains. And add another 0.1. This price is looking a bit vicious. And I can add another 0.1 there. 124 I'll take. 85 I'll take. Can add a light short just to hedge a bit of those. $70 there. Add a light long. Okay, and now we're just falling over time. I'll add 2 more of those. Okay, I'll add 2 more again. So just taking lots of light entries now. And anything right back to the lows, I'll consider something a bit heavier. Close those out. I'll take a light couple of those. Take one of them off, $25. Okay, I'll take one more light long. Still got this short for gains. Okay, so now I can think about buying at the lows. Take a light short there. And another light short. And if we keep going up, I can kill off those longs. So at this point, if I want to, I can end the whole thing in net gains anytime. I've got full control. Okay, just go play this a bit. Take that one for $42. I'm going to take another long. Take that short off for gains. Only going to add at the lows now. And really now on a bigger retracement, I'll close out. But you can see 189, 190 to about 1,500 pips straight down, more or less, somewhat. And really no troubles. Okay, we're not worried about anything. We're just floating through. No problem. And basically what I want to do is when we get a decent push, if we get a decent push, I want to kill off those longs. And if I need to, I can use some of the gains I've taken short, but also some of the gains I've taken on the longs. But at any time, it doesn't really matter. And time is going on a fair way now, but just remember you would have a diverse asset portfolio. So you'd have multiple portfolios paying you and you'd make a lot more money. But nonetheless, the point of this video is to show you that you can be in gains no matter what you're trading, as long as it's traded sensibly. Now, mostly we're using Forex markets because they range so much and therefore it's easy to hedge. So I'm going to kill that one off. I'm going to kill that one off. I'm going to kill all of them. If I take all of these away, I don't need to necessarily, but you can see I'm in net gains. 3.3k. Again, that's small sizes, one asset. You could do whatever you want with more risk, more assets. But that's how you control and get gains. Another solid win rate there. But yeah, that's how it works.